Hi everyone! This video is for those entrepreneurs who have manufacturing business ideas in mind. In this video, we will be covering inputs which may affect financial efficiency of this type of business. Please like, share and subscribe to this channel. Also, you can order financial models from scratch for your unique business ideas. We can help you with that. First of all, let's create a rule that all inputs in our model will be marked with unique color, blue. All other cells will contain formulas. This will ease future scenario modeling, which we will be doing many steps ahead. Marking inputs will help us or our business partners or bankers or any other third parties find and play with inputs easily, creating a huge amount of scenarios. Playing with inputs will give you the answers to simple but very important questions. How much money is needed? When is this financing needed? What is the structure of financing? What is the profit? What is the profitability? What is the payback period? And many others. First of all, you need to create a list of products that you're going to manufacture. For each product, you can create switch on and off toggle that will allow you to see the cash flow of your business idea with or without this or that product item. Maybe you are too optimistic with this or that product, so by switching it off, you will be able to see more realistic profitability and payback period. Then we are moving to equipment performance for each product that we're going to manufacture. Here we specify how many units of this or that product we will be manufacturing per 1 hour. Next step, we'll be adding local and global coefficients to equipment performance. All this is needed for the future scenario play. We can increase or decrease the performance for the specific product or for the whole product line in one moment. Then you may have several manufacturing lines where different or the same products are being manufactured. You may also want to switch on and off each of these lines. This will show you the cash flow statement, net present value, payback period diagram, and other financials with or without this or that manufacturing line in project. In order to calculate an accurate manufacturing plan in units, we need to move to time allocation. Here, we allocate the 100% of manufacturing time between the products for each manufacturing line. When all this is done, we create a new block of inputs where we set up the month and year when our project gives us the first revenues. Then we create one of the most important blocks of inputs from my point of view. Here, in percentage format, we set up the speed with which we achieve our target revenues. Why is it so important? Because when you open your business, you won't be able to reach your target revenues right from the first month of operating activity. Just look at the cash flow statement, for example. Here is where the revenues appear, and here we can see operating losses during first several months of operating activity. This means we must add these operating losses to investment stage expenses, and finally, these two components will give you the total amount of financing needed for the start of your business idea. Now, let's get back to our inputs. Then, you can make an assumption that each manufacturing line may contain maximum of 3 shifts. Plus, each shift may be plugged into a different moment inside the timeline of the project. Here, for each manufacturing line, we can specify the month of operating activity when this shift appears. Also, we can switch on and off different shifts to see the financials with or without this or that shift. So, if you think that working 3 shifts per day is too optimistic for your business concept, you can easily switch off third shift for each of manufacturing lines separately and see what will be the payback period and cash flow statement in this particular scenario. Then we specify the duration of one shift in hours. Also, we add a block of inputs where we will be setting up the amount of working days inside each month inside the typical year. Now it's time to move to direct costs. First of all, we start with creating a list of all direct cost items which participate in the whole manufacturing process. Here, we set up the price for 1 unit of each direct cost item. Next step will be adding local and global coefficients for the future scenario play. Here on the right, for each direct cost item, we have 2 very important parameters. The first one is purchase displacement. It's been set up in months. For example, we may have a business idea when we need some direct cost item today, but it may take us several months to get this item on site. This means we need to buy and deliver this item beforehand. These costs will affect the cash flow statement and increase the amount of financing needed for the start of your project. Another important parameter is how often we purchase this or that direct cost item. If we purchase something monthly, this is one story. But if we purchase some items once in 2 months, or once in a quarter, or once in a year, this may create some peaks of costs, which may create operating losses, affecting financing needed for your business idea. Then, for each product, we specify what direct cost items participate in its manufacturing process. Also, here we set up the consumption in natural units of this or that direct cost item per 1 unit of this or that product. Now we are moving to investment stage expenses. Here we have a green column. This is the moment when the project starts generating the first revenues. Here we are looking back and specify what we are investing in and how much we are investing in. Next step is payroll. First part of payroll is shift payroll. For each manufacturing line, we have a list of positions, salaries per person on each position, and an amount of people on each position, in case of working 1, 2, or 3 shift scheme. Then we add local and global coefficients for future scenario play. The next portion of payroll is fixed payroll. Here we set up stable positions, salary per person on each position, and amount of people on each position. We also add global and local coefficients for future stress testing and scenario building purposes. We may also have a payroll directly linked to the amount of products manufactured. In this case, we have the following block of inputs. Here, for each product, we can name direct payroll type, and then we can set up the payroll per one manufactured unit of this product. We are adding global and local coefficients as well. Now let's dive into the revenues. First of all, let's assume that we have different types of customers. For instance, let's assume that we have 3 types of customers for each product. Here, we're allocating 100% of manufactured units of products between these 3 types of customers. For each type of customer, we may have different price and algorithm of payment. For pricing, we have one global coefficient, 2 coefficients for each product, plus individual coefficients for each type of customer. All that is necessary for future scenario play. Here, inside these 3 columns, we can play with how our types of customers are going to pay us. For example, we sold product A for customer type 1 today, but this month he paid us 30%, next month 20%, and next month 50%. Another example, we sold product A for customer type 2 today, but this month he paid us nothing, but next month he paid us 100%. This payment algorithm is very important for the model because payment displacement may cause operating losses which will affect total financing needed for the project. Then we move to electricity costs. We start with specifying cost per 1 kilowatt. Then we set up the consumption of kilowatts per hour for each manufacturing line. Here we are adding coefficient as well. When you have some business idea in mind, you need to define your project direct cost and link them to the right parameter. For example, some direct cost will be linked to the amount of products manufactured. Another portion of direct cost will be linked to the amount of raw materials needed for the manufacturing process. Here, in this block of inputs, we're specifying the name of direct cost item. Then we set up the raw material to which this direct cost is linked to. Then we specify the value of this direct cost in dollars per 1 unit of raw material. Also, we are adding global and local coefficients for stress testing and scenario analysis. Another group of direct costs may be linked to the amount of shifts. This block of inputs is for that. For each manufacturing line, we can specify the name of direct cost item and the value of the cost in dollars per 1 shift. Global and local coefficients are added. Some direct costs may be linked to logistics, or pallets for example. In this case, we need to specify the cost per pallet. Then we also need to specify the amount of products allocated on one pallet to calculate the right amount of pallets needed. Now we are moving to the fixed costs. Interesting thing about fixed costs, despite of them being called fixed costs, these costs may have some seasonality or some specific payments algorithms inside the typical year. That's why, for the next block of inputs, we create a typical year and allocate all fixed cost items inside of it. Some costs will be stable from January till December. Some costs will appear once in 2 months, or quarterly, or once in half a year. Other may have some seasonality or have some unique algorithms. You can specify it here. Then we are moving to the loan modeling. First of all, we set up the loan amount, when we get this loan, year and month, term of loan in months, interest rate in percentages, and grace period in months for interest and principal payments. We also specify the type of interest payments between payments evenly and payments with regression. Then we move to the tax rates. Here we have 4 taxes: revenue, payroll, profit, and asset tax. Let's assume that asset tax will have some monthly value. Other 3 taxes will have percentage value from their tax base. Finally, our model moves to the cash flow statement. Cash flow consists of 3 parts: operating activity, investment activity, and financing activity. Operating activity shows us the breadth of your business idea without bank loans. Investment activity shows how much money and on what you've been spending before the project receives the first revenues. Financing activity shows inflows and outflows from different pockets like equity, loans that you will be using to finance investment plan expenses, and operating losses. Cash flow is one of the most important tables in our business plan. Here we can see the structure of revenues, direct costs, payroll, fixed costs, taxes, investment plan, loan and equity inflows, debt payments, and so on. The result from operating activity shows us the performance of our business idea without external loan burden. Cash balance at the end of the period shows us the cash generated by our project by this or that given moment inside the timeline. Then we calculate the amount of different types of financing needed for our business idea. The next table represents the values of simple and discounted payback periods, net income, net present value, internal rate of return, and total financing needed. The next step is devoted to internal rate of return calculations. In this cell, we specify the level of discount rate. Here we have 2 more parameters. One of them is discount rate count. The second parameter is a starting discount rate value. Then we move to the next step. This step is very important. This is a stress testing environment. Once we've created some scenario, we need to know how stable it is. What will happen with this scenario if revenues increase or expenses rise? In this block of financial model, we can easily test it. Here we have our scenario output financials. This cell is a coefficient that we will be adding to any revenue or expense input inside our project. Here we have another input. This is the step of change of parameter that we will be looking at during sensitivity analysis. If we change this parameter, this will affect this line. Column with 100 value is a current scenario financials. Columns to the left are project financials if value of project info that we're looking at will decrease. Columns to the right are financials if parameter increases. In this simple table, we can see when our model becomes less interesting when this or that parameter of inputs will grow or decrease. Let's add this parameter to product A performance. How many units of product A will be manufactured per hour? Now let's press Sense button. Now we can remove sensitivity analysis parameter from here and add it to another input, for example, investment plan. We can also add sensitivity analysis parameter to any input inside our model. Let's add it to the interest rate, for example. So now we can create a huge amount of scenarios and test them from this or that perspective. This will be very interesting and helpful for the future business owner and will tell him a lot about his business idea. So thanks for watching, please like, share and subscribe to our channel. You can download this model using the link in the description of this video. We can also create financial models from scratch for your unique business ideas. So see you in next videos, thank you and bye.